Risk number 7 is beggar thy world. The world's two largest economies are trying to address domestic challenges in ways economically that are going to be very challenging for other countries that do business with them to respond. For the United States, that is responding to trade deficits by threatening and placing higher levels of tariffs against them. For China, it's dealing with very low consumer demand by trying to manufacture and export their way out of challenges. And meanwhile, these two countries don't work well together, so the Americans are going to say, you've got to hit the Chinese hard. The Chinese are going to say, you've got to work closely and say no to the Americans, or we're not going to do good business with you. It's a very hard time to stand in between those US and Chinese policies. That's particularly true because the dollar is going to be very strong, because global demand is not what it would normally be. So commodity prices are going to be lower. This is, if you are a commodities exporter, particularly for some of the Middle Eastern countries, for example, or if you are an emerging market that is facing higher interest rates, higher debt, and a more challenging global environment, you haven't rebounded completely since COVID, this is a maximal challenging economic time for you. Brazil is already experiencing some of this, the most important economy in South America. Just a little bit of disappointment for the markets in terms of constraints in their fiscal spend and their budget, and suddenly their currency is tanking and investor sentiment is going way down. You're not on the precipice of a major financial crisis, but these things happen slowly and then they happen quickly, and the level of pressure on developing countries around the world, level of pressure on the European markets right now is greater than it's been at any point since the global financial crisis.